Welcome back to Be Rich. In the first week of December, between 8th and 12th of December, I plan to be in Muscat in the Sultanate of Oman. Those who would like to see me in Oman can get in touch with my team. There's a WhatsApp number given below and there's an email ID also given below. So those desirous of getting in touch with me at the Sultanate of Oman, especially in the city of Muscat from 8th to 12th of December, can definitely contact me there. I hope to see you all in Oman soon. Thank you for watching. Be Rich. Good evening and welcome back to Be Rich. As I prepare to speak for the last time this week, news has just come in of a very surprising development in the European Union. The European Union is basically held together by Germany, and Germany is the largest economy of the Union. The European Union is Germany, Germany is the European Union, especially after UK has left. It is very clear that the United Kingdom has lost and EU has gained after the war. By war, I mean the divorce between the two countries and the two blocs. At this time, it is further enhanced with the reports that come that Germany has not slipped into recession and Germany has managed to keep its head above water in spite of all the talks that has happened. In the previous quarter, Germany has managed to grow at 0.3%, not minus 0.2%. So Germany has escaped recession for now. All the people who said it is minus 2%, minus 0.2%, are sadly mistaken. The recession may come, but it will come sometime late next year. But as of now, Germany has dodged the bullet. And this is in spite of Germany taking the brunt of high energy prices because it was completely dependent on Russia for gas. And therefore, it gives space to the European Union and the German Central Bank, the Bundesbank, to increase interest rates. This is because inflation in Germany is also high, and the Germans cannot tolerate inflation by their constitutional mandate, especially what happened between World War I and World War II, where hyperinflation in the German world made sure that Hitler would rise and the rise of fascist forces. Therefore, Germans are constitutionally mandated to keep inflation under check. No other country has that. So we can expect interest rates in European Union to go up the way the British, in spite of being in recession, increased their interest rates by 0.75 yesterday. We can expect the European Union to follow. So interest rates are set to rise. There is another interesting development. There is something called TIPS, that is the inflation protected bonds in the United States. They traded yesterday. I told you about how much interest they are paying, and today there was a shocking development. I read somewhere that an inflation bond has to pay an interest rate of 9.62% in US. That's more than a B-rated bond in India. A B-rated bond in India will pay between, if it is secured, will pay between 9.5 to 10%. But we are now looking at a top-notch American Treasury bond paying 9.62 because nobody expected inflation to jump the way it did. To put this all in perspective, I have with me my good friend Anish Gupta, an auditor, who believes that inflation is not coming down in the United States anytime soon, but by which there might be a zero point 0.1, zero point 0.2 drop, but don't expect a huge drop in the next 2 months. This is what he believes. Let's have a chat with him. What do you think, Anish? Why do you believe that there's no possibility of it happening?
So, if you are looking at the recent trends and data which is coming, the credit growth globally has been very strong. So when there is credit demand, that means when there is demand for credit, that means there is demand for goods and services. And so what has happened is the inflation from manufacturing is now transitioned into intangibles and services. So people are looking only at the commodity prices or the manufacturing prices and saying that inflation is gone. But wages, salary, rents, and other intangible there is a huge inflation in that globally. So what will happen is when credit is there, huge demand for credit plus wage, the intangible inflation, services inflation, this will again feed back into the next cycle of manufacturing. And with the dislocation in the global supply chain and the manufacturing cannot withstand the excess demand. So obviously the prices will go up, and this cycle will keep continuing until the treasury, the central bankers globally take the rates very high and crush the demand once and for all for a near term. But no, I don't think so. Anyone is going to take such a drastic step in. Will Powell increase in one shot 200 basis points? He will not do it. But when there was bad times in COVID, they brought down the rates very quickly.
So what you are saying is, at the first sign of serious trouble, not just dropping inflation, where people are standing and people are protesting, since it's a democracy, America will stop worrying about inflation and cut rates or pause. So you agree with the theory that there is going around. When inflation comes to 4, America will pause and inflation will remain there for some time, but again start to move up.
Yes, so it is a very difficult situation to balance everything. Whether you want to balance the liquidity, the prices, and the inflation, which is not easily happening. So even if inflation comes back to 4% because of base effect, so people, there is the tendency that people forgot inflation in the developed world. People will start again worrying about inflation and demanding higher wages. Since we are also now dislocating the manufacturing, and manufacturing is moving around the globe, so the labor, which was the cheap labor, which is not going to be available. Even in China, it will not be available
Because
because
they are
it is
just aging.
aging. So the labor cost in the globe is going to rise. So I think so we are going to be in era of a higher inflation decades, maybe 1 or 2 decades to come, where we have very high
So
inflation.
can we say this? For those like you and me who have been tracking interest rate cycles, normally interest rate cycles turn in 20-25 years. The era of low rates is over, zero rates is over. Governments have made too much debt. So people will want some earnings. So there will be higher treasury rates and higher interest rates. And but there is a possibility that the central bank will not crush inflation fully. They'll allow it to be between 4 and 6% and have a nominal growth of 8%, which means a real growth of only 2%, and slowly allow debt to die. They'll inflate their way out of debt at 4%. If they inflate over 20 years, this debt will become manageable. So you think there is going to be a great period of inflation. Not too much, because if you inflate it too much, people will not vote for you. So it's like the frog in the water. As long as it's neither hot nor it's too cold and it's the right temperature, the frog is going to love it. So what these guys are going to do is they're going to bring down the temperature to cold or freezing temperature,
Or they're not going to increase the rates too high.
right? To make it
And
hot.
this dislocation which has happened because of Xi Jinping and Vladimir Putin is nowhere going to reverse because of their autocratic behavior.
Yes.
So this how the trend is going to continue for the coming future. And even Europe is aging very fast. So the European debt, who is going to carry the European debt?
So that's what I'm saying. The only way they can do that is by creating financial repression. What do I mean by financial repression? Financial repression means you steal money from the saver and give it to the borrower. That is, you devalue the value of currency. But if you devalue it too fast, people are going to protest. So you devalue at a rate at which people don't realize. You steal from the savers and pay the borrowers. And the biggest borrower, mind you, my good friends, is the government.
Yes, and another thing I'm worried about is all these pension funds, the European and the Canadian and the US pension funds who had
And
invested in very long term
bonds, and
bonds.
not only that, they have taken liability products, which is to enhance returns, have played in the derivative markets also. So one or two of these pension funds may be going bankrupt. In fact, they are saying, rumors in the Financial Times say, Britain's one of its favorite pension fund manager may be beyond repair.
So not sure where this will go, but maybe the next after the next 10 20 years you may see Africa as the next
That I do not. I don't know whether I'll be there 25 years down the line. But what I know for sure that these are tough times. There will be a huge rally in equities. If there is financial repression and inflation is tolerated, you will see a huge rally in American stocks. There will be misallocation of capital. They will try to bring the factories back to America. The government will guarantee the loans. And yeah, America is going to have an ugly party for next 15, 20 years. So at the bottom, investing in US stocks looks to be a good option. What do you think?
So what I think is with inflation such way and where we see that in government not going to crush inflation, the the profitability of the companies will go up. Even though their earnings, the multiples which are assigned because of the tighter monetary conditions or higher interest rates, the multiples may come down, but real economy, instead of this fanciful tangible economy, intangible economy, the real economy, the manufacturing may be coming back. So
Till the point, yeah,
like Trump said, will
yeah, will make America great again. Intel is now bringing back manufacturing into US. But initial 15, 10 years will be good. And after that, misallocation of capital will take place. Anyway, but it looks good to be in American equity from sometime next year.
yes,
But it's better to get out now. Wait till February, March of next year. Once we know for sure that the Fed pivots, you can start piling onto American stocks. Thank you for watching Be Rich. If you like this content, hit the like button, press the subscribe button, and turn on the bell notification. If you do not turn on the bell notification, you will not be notified every time we put out a video. Once again, I thank you for your support for Be Rich. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written two books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.